Hello everyone, today is Monday, December 15th, 2025, Eastern Time. Welcome to Panda Finance. Let's take a look at the top 10 global corporate news stories from the past week. Here are the details. White House clears Nvidia to resume H200 chip sales to China, with a 25% U.S. cut. U.S. President Donald Trump said Washington will allow Nvidia to resume exports of its H200 artificial intelligence chips to China, under an unconventional arrangement that would see the U.S. government collect 25% of the proceeds. In a post on Truth Social, Mr. Trump said Nvidia would be permitted to sell the chips to approved customers in China and other countries, provided that the transactions meet what he described as strong national security conditions. He added that 25% of the revenue will be paid to the United States. The deal marks the latest instance of Mr. Trump seeking to monetize regulatory approvals through bespoke agreements with private companies, blurring the line between industrial policy and fiscal strategy. Oracle pushes back completion of OpenAI data centers to 2028. Oracle has delayed the completion of several data centers it is building for OpenAI, pushing expected delivery dates from 2027 to 2028, citing labor shortages and materials constraints. The facilities are part of a contract valued at roughly $300 billion, under which Oracle is supplying the computing infrastructure required to train and run OpenAI's models. Despite the setbacks, an Oracle spokesperson said the company remains confident in its ability to meet its long-term commitments and expansion targets. Oracle said the first data center developed for OpenAI remains on track and has already delivered more than 96,000 Nvidia chips. Disney invests $1 billion in OpenAI, licensing iconic characters for AI video creation. The Walt Disney Company said it will invest $1 billion in OpenAI and allow the artificial intelligence startup to use characters from franchises such as Star Wars, Pixar, and Marvel in its Sora video generation platform. The three-year partnership could reshape how Hollywood produces content, marking one of the most significant endorsements yet of generative artificial intelligence by a major entertainment company. The deal sidesteps many of the industry's anxieties around the impact of AI on creative labor and intellectual property. Beginning early next year, OpenAI's Sora and ChatGPT images tools will be able to generate videos featuring licensed Disney characters, including Mickey Mouse, Cinderella, and Mufasa. Bezos and Musk race to take the data center boom into orbit. Elon Musk and Jeff Bezos, longtime rivals in rockets and satellites, are now competing to move the data center boom into space. A team at Blue Origin, backed by Mr. Bezos, has spent more than a year studying the technology required to build orbital artificial intelligence data centers. Meanwhile, Mr. Musk's SpaceX is exploring the use of upgraded Starlink satellites to host AI computing payloads. SpaceX has pitched the concept as part of an ongoing share sale that could value the company at about $800 billion. Mr. Musk has also hinted at a future initial public offering. Media reports suggest SpaceX may seek to raise more than $25 billion in a 2026 flotation, potentially lifting its valuation above $1 trillion. If realized, the offering would rank as the second largest initial public offering in history, behind Saudi Aramco's 2019 listing. Paramount launches $108 billion hostile bid for Warner Bros. Discovery. Paramount has launched a $108.4 billion hostile takeover bid for Warner Bros. Discovery, in a last-ditch effort to build a media giant capable of challenging Netflix's dominance in streaming. The move comes weeks after Netflix prevailed in a protracted bidding war with Paramount and Comcast, agreeing to acquire Warner Bros. Discovery's film, television, and streaming assets for $72 billion. Paramount's renewed bid signals that the battle for Warner's prized assets, including HBO and DC Comics, is far from over. Warner Bros. Discovery said its board will review Paramount's proposal but does not intend to change its recommendation in favor of the Netflix deal. Mars completes $35.9 billion acquisition of Pringles owner Kellanova. Mars Incorporated said it has completed its acquisition of Kellanova, the owner of the Pringles snack brand, and that Kellanova has been delisted from the New York Stock Exchange. Mars announced the $35.9 billion deal in August 2024, with Kellanova shareholders approving the transaction in November. On December 8, 2025, the European Commission granted unconditional regulatory approval, clearing the final hurdle for the takeover. The acquisition further consolidates Mars's position in the global packaged food market. Unilever spins off ice cream business as Magnum lists in Europe and the U.S. The Magnum Ice Cream Company, the world's largest ice cream business, began trading its shares in the Netherlands, the United Kingdom and the United States, completing Unilever's long-planned spin-off of the division. Unilever announced the separation in March 2024. Magnum has operated as an independent company within the group since July 1, 2025. Unilever will retain a 19.9% stake for up to 5 years. The new company generates €8.3 billion in annual revenue and employs about 19,000 people. On the first day of trading, Unilever shares fell 7%, wiping out nearly €9 billion in market value, while the 80% stake distributed to shareholders in Magnum was valued at about €6.30 billion. With the ice cream off-season underway, Magnum is trading at roughly 8.2 times expected earnings before interest, taxes, depreciation and amortization, a relatively modest valuation by consumer goods standards. Time names the Architects of AI as 2025 Person of the Year. Time magazine named the Architects of AI as its 2025 Person of the Year, citing the explosive realization of artificial intelligence's potential. The trajectory of AI is now irreversible, the magazine said, crediting industry leaders with launching an era of intelligent machines that both inspire awe and provoke deep concern. The cover features figures including Mark Zuckerberg, Lisa Su, Elon Musk, Jensen Huang and Sam Altman, notably excluding Google chief executive Sundar Pichai. Separately, the Financial Times named Nvidia chief executive Jensen Huang as its Person of the Year, highlighting his role in leading one of the largest private sector investment waves in history. Nvidia has become the world's most valuable company and briefly surpassed a $5 trillion market capitalization, an extraordinary rise for a firm once considered peripheral to mainstream technology. Volkswagen achieves full localized vehicle development in China. Volkswagen Group has, for the first time, developed an entire vehicle platform and core technologies outside Germany and successfully brought them through all approval processes to market. The milestone was marked by the launch of a new testing facility on November 25 at Volkswagen China Technology Company in Hefei. The move signals that Volkswagen has achieved fully localized research and development in China. Under the group's In China, for China strategy, the Hefei Center has become the company's most comprehensive research hub outside its home market and its only center dedicated exclusively to electric, intelligent and connected vehicles. China's trade surplus surpasses $1 trillion despite U.S. tariffs. Roughly a year after President Trump returned to the White House, China's factories are producing at record levels, even as U.S. tariffs remain in place. Customs data show that China's goods trade surplus exceeded $1 trillion in the first 11 months of the year, a historic high. Rather than weakening China's export machine, U.S. pressure has reinforced the country's role as the world's indispensable manufacturing hub. Chinese producers have continued to supply goods in strong global demand, successfully expanding sales to Europe and developing economies, even as trade barriers in the United States have risen. Thank you for tuning in to today's financial news. We look forward to seeing you again.